what's happening in the market. I'll start off with Perth because obviously that's driving the Perth, Adelaide, and Brisbane are driving the national market to such an extent that that of course there has been some growth in the national market, but only 1.7% in the last quarter, and down to 7.6% for the year. So these states that are still going gangbusters are the ones that are holding up the national property market. And I'm going to talk quite a bit about that and what I'm seeing. Okay. So let's get cracking. All right. So Perth median house price, more than 20% over 2024. So straight out of the starting gates, what a great thing to prospect with. Get out to all your clients, pick up the phone and say, congratulations, you've made 20% on your investment. What a great icebreaker. Obviously, that is national, and it's obviously not sort of specific to their suburb. Some are more, some are less, but it's a great sort of icebreaker if you're looking for stock, which most would be and are. Medium house price could reach 740 by the end of 2024. It's currently at 668. And it's already 11% higher than the end of December 2023 and 22.6% higher than the previous peak of 545 set in 2014 when we had the highest sort of median house price in Australia. So after seeing little growth for most of 2023, the median unit price has recorded 8.3% growth since December, reaching 445 at the end of June. This is 5,000 below the previous peak of 450 set in 2014 and is currently trending, continues to exceed this version. So strong population growth constraints in the building industry have contributed to this for Perth. WA recording 3.3% population growth in the year to December, which is approximately 79,000 people. Now, just to put that into perspective, folks, that is double the size of Baldivis. So Baldivis is one of the biggest suburbs in Western Australia, hosting about 30 to 35,000 people. Well, it's twice that. That's how much immigration we've had last year. So we're talking quite substantial, and that is why obviously the market has been so ballistic, but also rents have gone to skyrocket levels. And people are going, well, holy shit, if I can afford 650 a week, surely I can afford a loan. And in a lot of cases, they've been correct. So you'll obviously find a lot of 90, 95, 98% lends, because the banks are lending people the money because they've got a track record of being able to pay the rent at very high levels. Okay, so new homes starts remain low, although they have increased. They are lower. Need to be an unexpected change in the current conditions for things to change here in Perth. And I'll get back to that in a minute, because I've got a vision which I'm very rarely wrong, and just what I'm seeing and what I'm feeling. While Perth median rent prices are at record highs, they remain stable over the June quarter, following several periods of increases. So data suggests that the rental market is easing slightly. At the end of June, the Perth median dwelling price was 650, unchanged from March, but 8.8% higher than December 2023. House rent prices was 650, rent price is 600 per week. unchanged from March, and 5.3. So it is clear that the rental market is definitely tapping out. Okay. And there's some signs there that properties are taking longer to rent. At the moment, from what I'm getting from most of my clients, there is the biggest vacancy rate that they've had in two or more years. I was in Mint Real Estate yesterday. They've got 8 properties available, which they haven't had. And a few others are reporting the same. Okay, so let's have a look at some more details. And let's have a look at the national housing, and then we'll get some feedback. National home values rose 0.5 in July, the 18th consecutive monthly increase nationally, but it's thinning. It is clear the momentum is leaving the cycle and conditions are becoming more diverse. Okay, so let's have a look at what's happening nationally. So with a 5% growth in July, gained 13.5%, and values have consistently pushed a new record high since November last year. However, while the headline growth rate remains positive, it is clear momentum is leaving the cycle. I've said that. Okay, so housing growth trends. The number of homes for sale in Brisbane, Adelaide, and Perth is more than 30% below average for this time of year. While weaker markets like Melbourne and Hobart are recording advertised supply well above average levels, the erosion in borrowing capacity and affordability factors is skewing demand towards the lower price points of the market. Growth in regional housing values is once again lagging to the capitals. Units are now rising faster than houses across most capital cities. So just to get a reflection on what's happening, so Sydney grew 0.3% for the month, 1.1 for the quarter, 5.6 for the year. So slowed right down. Melbourne is negative 0.4 quarter, month, negative 0.9 for the quarter, and showing a mingy little 2.2% for the year annually. So they're flatlining. All right. Brisbane 1.1 for the month, 3.8 and 16 for the year. Still very strong. Adelaide 1.8 for the month, 5% for the quarter, 15% for the year. Still very strong. And then I've put Perth leading the charge with 2% for the month, 6.2 for the quarter, and 24.7% for the year, making us the undisputed by almost 10%, biggest growth rate in the last 12 months. Combined capital cities, 0.5 for the month, 1.8 for the quarter, and 7.9 for the year. Combined regional 0.4, 1.3 for the quarter, and 6.9 annually. Nationally, 0.5, 1.7 for the quarter, and 7.6 already mentioned. Okay, so let's have a look at the rental market, and this just confirms what's going on in Perth. But we'll give you a bit more insight as to what's happening nationally. So only 0.1% higher in July, the smallest monthly rise since August 2020. All right, that's significant. A clear slowdown in the pace of rental growth across unit sector has been the main drag on the rental growth. Sydney unit rents still rose by 6.6 over the past 12 months. The easing in rental growth aligns with the peak in net overseas migration in the first quarter of 2023. The large majority of the overseas migrants, mostly students, arrive in Australia on temporary visas. Housing demand from overseas migration tends to favour inner city unit rental markets. That's why Sydney's cranked with the units. With value growth outpacing rental growth, we could once again see a downward pressure on gross rental yields. So there is definitely a shift. If you're looking, I'm looking at the table here, and you can actually see significantly that that there is a downward shift, literally across the board, even in Perth. Annual changes in rents are happening. So that's interesting. And like I said, I'll give you my opinion in a second. Well, let me give it to you now because it's a rental department. Yeah, I've already mentioned it. Property prices are very, very high, and people are looking at alternative ways to accommodate themselves. We're finding a lot of people who are vacating properties are buying. Okay. So that's a very interesting stat. A lot of people who are vacating properties are buying. Okay. And we haven't seen as much of that in the past. Okay, let's have a look at what's driving the market and why is there such I suppose diversity in the market. And just from my experience, when we experience diversity, obviously it means that there's pain somewhere along the line, even though it's not showing up in the three minor cities, Adelaide, Brisbane, Perth. There has been a strong migration to those places since COVID. But the major cities still get the bulk of the migration. And of course, you know, the students and things, because they have to be there for the universities and stuff like that. So it is an indicator, is what I'm trying to say, of what's coming. The underlying mismatch between housing supply and demand looks set to support housing prices through the second half of the year. So we should have a good 6 months, okay? I don't think anything's going to change rapidly, but there is a lot of pain out there. I'm starting to see a few auctions coming through, mortgagee auctions, more than I have in 2023 anyway, and early 2024. So I've already booked probably 3 of those are mortgagee sales, and I've already sold 1 or 2 mortgagee sales. So they're trickling, not massively, but they're trickling. Real estate listings have been flowing onto the market at a pace slightly above average through autumn and winter, which has been testing the depth of buyer demand. Pockets of weakness are emerging. Beyond the number of homes available to purchase, the supply of newly built home remains insufficiently relative to population growth. Seeing residential construction costs rising, although the cost to build isn't reducing, it is becoming, obviously an option to build again because of prices being so high. Even I've considered, hey, instead of owning shit properties that we're going to spend a lot on maintenance, why don't we just, build at, a reasonable price and then get the negatively, get the gains, the capital, the tax benefits from buying and building new, and not have any maintenance issues. So if I'm thinking that as an investor speculator, then the market is. So that sort of backs that up. So almost 3.5 times faster than construction costs, profit margins should generally repair. Investors are taking a larger share of demand. So the investors are back in the market, especially in those cities, Perth, Adelaide, and Brisbane, okay? Which also gives us an indicator of a few things, all right? So trending emerging from ABS lending indicates data upswing in lending for investment purposes. Okay, nationally, the number of investors' loans are up 24.8% on last year, and the value of lending to interest has jumped 29.5%. Over the past, listen to this, over the past year to comprise 37.1% of mortgage demand in WA, where home values have jumped 23.9% over the year. Investors leading is up to 53%. So just to take that into consideration, I didn't know these stats before I read them and marked them out. 53% of our sales in WA are going to investors at the moment. That is very interesting. That is very, very interesting. Okay, because investors can come and go quicker than Melbourne weather. More than doubles in national average. Investor demand tends to seek out capital growth, and that's why they're buying here. Okay, so it's no surprise to see such an upward swing in markets like Western Australia, Queensland, where values are rising rapidly and yields tend to be higher than the larger capitals. However, the share of investment demand is well above average at a time where rental yields are tracking substantially lower than mortgage rates. Applying a rising number of investors are likely to be experiencing a cash flow loss, especially if they are highly leveraged. That is important. So yes, there's been a swing over the last 16 months, 18 months, and in particular 12 months, maybe 2 years with investors, with prices tapping out, and rents tapping out, and having bought at the top end of the market. They are going to see their return not being what they hoped it to be, and that could cause some slowdown. So the outlook for housing in the sector remains complicated. It's like a bad relationship. It's complicated. While constraints on new housing supply are likely to keep the floor under home prices and remain a feature of the market for some time yet, downsides risks are growing. Housing affordability is becoming more challenging in markets where values are rising faster than incomes. Certainly that's the case in Perth. In March, the national dwelling value to income ratio rose 7.7 and is likely to be approaching record highs once the June quarter data is published next month. Similarly, the portion of housing income required to service a new mortgage was already at record highs in March and has likely risen further by now. So, just a quick look at New Zealand, because we do need to keep an eye on our counterparts over there, because our trends do tend to follow them. Believe it or not, the Aussie trends, they used to follow us back in the day, and now we tend to follow them. Why? Because they're more of a micro market, so things happen a lot quicker there, where Aussie, we've got bigger states, a bigger country, more population. So New Zealand showed a 0.5 fall in values across New Zealand in July, the 5th monthly fall in a row, taking the total decline from February mini peak to 2.5. The median value across all stock nationally now sits at 827,515. Not bad, really. With the fall from February figure 848, so it's dropped 20 odd grand, equating to approximately 21,200. Values remain about 16% below the boom time peak of 982 in January 2022, although they are still approximately 19% higher than pre-COVID levels. So there could be a drop-off. The new hedonic, I'm talking in Aussie. In fact, there will be. It's just when. The new hedonic methodology improves the timeline accuracy and measurement of changes in resilient markets, with the weighing recent sales evidence demonstrating the prompt read of re-emerging the soft housing market conditions across the country. One last thing. There were falls in median values in each of the main centres in July, with Tauranga, Auckland, Christchurch, all dropping. Okay, so New Zealand, negative 0.5 for the month, negative 1.9 for the quarter, 2.9 annually. So their growth has been considerably lower. That's what's happening in New Zealand. For our New Zealand clients, hang in there, and of course, adapt. And of course, our Melbourneites, same. You're showing a negative growth rate. So, a bit more of a normal market. And I'm getting the feel that some of our Perthians are actually looking for a more normal market. But what we don't want to see, and unfortunately we might see some drop off because we've had such a high. Some suburbs are showing 39% growth in Perth, which is 35%, which is just unbelievable. Just to give you guys a bit of a heads up, we've sold 2 of our investment properties, and we've got the other 4 on the market. Why? Because I can't guarantee my trust that I'm representing that we'll see these prices again. And once we pull in all this cash, we will be different investors. We might be able to do developments with that cash. We might be able to get higher or more solid blue chip security returns because we're now dealing with a much more substantial amount of money. I share this with you because I'm just an average investor. I'm an average speculator. So if I'm thinking that I believe that there was okay, so what my forecast is this, and then we'll wrap up the market and we'll get some feedback. And I really want you guys to come back at me and say, nah, don't see it, and we'll chat it out. All right, this is how I see the Perth market in the next 6 months. I think speculative sellers, people who have never seen the times that we've had, where they've made $200,000, $300,000, $400,000, $500,000 on their property, will be very tempted to grab that because it means lifestyle changes, holidays, helping family, doing things that young and mature people have never had the opportunity to do. So speculative owners, people who are not super savvy, they'll go, let me just grab this money. Let's grab it, and we'll rent for a few years and then we'll downsize or get an apartment. They don't really think that far ahead, but there'll be a lot of I believe that over the next 3 months there's going to be some speculative sellers grabbing the prices because it's now pushed out there, this growth that the state has had. Obviously, and then also the renters are, sort of vacating. So some of those properties will come to market as well. Then the sun will come out, and then the seasonal stock will come to the market. Okay. So I see a change in the market ever so slowly towards the end of the year. I don't see a rapid drop. I don't see a fall. I was expecting an interest rate hike, but unfortunately, we didn't get one because it's not WA focused. It's nationally focused. And over there, they are already feeling the pinch. So to slap on an interest rate hike would have actually been quite rude and probably quite catastrophic. I think we would have seen some serious, carnage. All right. So rightly so, they've kept it as it is. And they've kind of said, all right, let's play again. Let's give it another few months. Let's see how it goes. I see the market, more stock coming to the market, and I see it easing. I'm already getting reports saying prices are easing, even in Perth. Taking a little bit of time to sell. Obviously, the cheaper stuff is going. I'm talking the middle stuff that's kind of now 200,000 more than what it was 2 years ago, or 300,000, where people are pulling together and going, I don't know if I can afford this, and I might be having to look for something smaller, cheaper. So I see it easing into the end of the year, and then obviously depending on interest rates, will depend on where it goes in 2025. Now I do see 2025 being the year of change, but that being said, Perth and Western Australia is the promised land. It is slightly insulated, and there is extremely, extremely good demand for people wanting to come live here. finally, lastly, I've spoken to my mining friends because I got a property in Port Hedland, which I've now put on the market. And he said, they've found a real good vein of iron ore in an African country. I don't know the details, and they're going to start pulling iron ore out of Africa. Massive operation BHP are doing. Okay, which means that the demand out of Port Hedland's not going to be as strong. What else did he say? He also said that China's stockpiling of iron ore is massive. They are not going to have a demand as much. The mines have now made, from what I'm hearing, have made an executive decision that they're going to do more and more fly in, fly out from various parts of the country, rather than establish people in Port Hedland and mining towns as well as Perth. So there's slight indicators there that mining's starting to ease. Lithium's also easing in price. So yeah, there's some indicators there. But hey, that's an opinion only. Don't take it as gospel. Don't just put your property on the market or advise those. That's just that last part was just an opinion. The rest was facts. But my opinion is based on facts. That's enough from me. I've got 5 minutes to chat. Who wants to give me their feedback? Agree, disagree? What are you seeing? Go.
I'll jump in if no one's going to jump in.
Go for it, mate.
I don't think we'll see a slowdown anytime soon. We're just going to see a movement of where that money is going to flow to. Is Richard on here? He's not. I think Richard will tell you that apartments are flying. They're starting to fly, starting to have increases in prices. One bedrooms that were selling for 350 are now selling for low fours. Doesn't look like they're going to stop. There's many people at home opens. The cheap stuff that we're selling, or houses that are further suburbs, I had 35 offers on the weekend on a property. It's just insane out there still. And I think there's still only like 3,200 properties on the market. I just had a development fall over because they can't fund it because of a sold out development fall over because they can't fund it because the building prices are still affecting them. So the builders keep trying to charge them more money. So they're pulling it off. So in the next week, we'll have to advise all the buyers of that's fallen off. So if supply can't be fixed and we're still going to have some people coming to WA, whether it's a big number or not, I can't see how this market changes. Now, the top end might be slowing down. The guys from Vivian Real Estate might be able to say something else about that. But I think that just the money will just flow into different areas. The rentals are slow as we actually have like no one coming to our home open. So I agree with that. I think that might be because of share houses. People are starting to go, we're not moving. We'll just get someone in, things like that. So the rental opens are dead, which is weird. Like it happened kind of almost overnight. So yeah, I think sales market personally, it's going to keep going. And I think if you can get access to stuff between $300,000 and $800,000, you're going to be selling a lot of property. That's my opinion. You're on mute.
Ash, thanks very much. That was good feedback, mate, and very much appreciated. And I agree with you wholeheartedly. Just be mindful that when you're in it, sometimes it's hard to see through it. And just the way you saw the tap turn off for the rental market, it happens just like that for sales. But let's hope you're right. I agree with a lot of what you're saying. But excuse me. I think we've just got to be mindful. I mean, make hay while the sun shines. Absolutely. Get stock and get started. I went to a home open on the weekend, which I don't normally do. My sister-in-law's buying. So if anybody's has got something in the Palmyra, Melville, anywhere in this northern South River, she's got up to about 700 to spend and looking for something, 2x1, 3x1. It's horrific what value you're getting. It's shocking. But I did go to a home open and yes, there was at least 50 people attended. But I don't just look at that. I look at from a holistic approach. I look at the facts. But you are right. Nothing's going to happen in a hurry. It's definitely, well, it's supply and demand. And if there's only 3,000 properties on the market, which there is, there's 5,000 in total, which is critical. But there is some signs. But great feedback there, Ash. Anyone want to add to that before we get stuck into the prize giving? Anyone seeing anything different to what Ash is seeing? I know, Trent, you guys do a blend of housing, and of course units. So what are you seeing, Trent?
Yeah, I mean, Ash was pretty correct. I think anything like obviously Western suburbs could be slightly different, but anything from a $300,000 one-bedroom unit to $1 million brand new 2x2 seems to be flying absolutely off the shelf. Like, can't get enough of them. $2 million homes, depending on what they are, still going quite well. Inquiry is really, really high. Yes, probably not flying off the shelf week one, but at the end of the day, it's still selling at a very quick pace and the inquiry is still very high. I kind of agree. Like, I mean, the rental, we've noticed more stock has become available. So tenants have got more choice, which is softening the prices. But we're even from our 551 bedrooms, getting lots of inquiry on them. We've got a 1750 house, 4x2 house on the river, still getting lots of inquiry on that. So it's slow down, yes, but not enough to, I guess, indicate a market shift just yet.
No.
I think when I look at like the stock market as well, like I'm not massive into stock investing, so like, you know, I don't really understand that. But obviously, whatever happened on Monday was quite significant. You know, $1 trillion or something like that disappearing off the stock market, and so from a lot of people that I've spoken to, they're just wanting to put their money into property again. So I think that might actually help us because it's put a lot of fear into that investment market. But yeah, no, I mean, contrary to what Ash said before, we're certainly not noticing. If you get your hands on the stock, you're in for a good spring. And from what I can tell, what I can read into it, the amount of appraisals that are going on at the moment, I think Perth's in for a massive spring. I reckon this is going to be a selling frenzy. And because that, like Ryan, I was quite shocked when you just said you've pretty much got all your properties on the market. That's the sort of thing that I'm talking about. I reckon there's lots of people that are just going to go cash in zone this spring, but I don't think that's going to I don't think that's going to cause any crashing or any negative growth because, in my opinion, mate, we need the stock. We're down to 3,000 listings, 5,000. We were crying last year. We were crying, and we're at 3,000. So give me another 5,000 homes because we'll sell them. The demand, as far as what Ashby and what I'm reporting, is that it's there. So you can bring me another 1,000 homes, no problems. I'll probably sell them over the next month.
Yeah, good, mate. Obviously, those people that you're not seeing at your rental properties, they are the people buying the properties. So that's kind of, I believe, a sign there too. So very good. I'm not in disagreement to all of you. I'm the voice of reason, just keeping everybody, and I'm very, very optimistic. But I'm also got skin in the game here. So I'm not speaking from an absolute sort of I've actually made the executive decision. Now, if the market goes up another 20% and I've cashed in, it doesn't bother me because my money is made. I've made the money and it doesn't bother me. The risk is now gone. I'm now looking for a different speculative investment, and I will make money on that next speculative investment. But for me, it was just too good to be true. I'm going to cash in and go again. But absolutely, let's keep the buzz going, but just be mindful of the holistic view on the whole thing.